taking questions after this shortly. Where do I get this now? Hello.
We can hear you.
Yeah, I'm just trying to share my screen and I can't, not giving me that option at all.
Try it again. Please try again.
Okay. Let me carry on. I can't check from your side. I don't know why I can't share my screen, but let me just carry on. Maybe if you check and if you could give me access to share screen, then that'll be good. Okay. Sorry, guys. Say that again, because
I've done that already. I've done that already. I've given.
Yeah, it's not even giving me any screen at all to do that.
It's just beneath of your screen. Your screen you see share screen option. It's in green.
Yeah. Oh, yes. Okay, 1 second now. You know what? Let me. Okay.
Right. So while we wait for Mr. Ayodeji to get his screen sharing, I really hope it's been informative. So far, it's talked about the options available to us. We have the share ownership, we have the council tax, which is also under the right to buy, and it talked about some warnings. Also, we have the help to buy equity loan, which is what some of us are, comfortable, also not comfortable, we're familiar with. And also, in a way to save money, we used to have the help to buy ISA, which has been stopped now. But we have the lifetime ISA, which can be used for mortgage purposes. You can, deposit your money through other means as well. I believe you'll talk about it as we run on. And also, it talked about the power of leverage, the reason why you can, speak to a family member here in the UK that is happy to give you some money, even though you won't be using it for, say, you won't be spending it off. It's just to deposit. Oh, there it is. I think you found your feet now.
Yeah, okay.
Okay, so it's just, yeah. So do you want me to stop now?
Yeah, thank you for that. Thank you for that summary. So thank you guys. Thank you for staying on. So I was showing us the different costs that might come into play when we're thinking about buying property. And like I said, some people might not be ready right now. Some people might be ready in 6 months or 1 year. So I want us to be able to go away with a plan to know, okay, this is exactly how much I need. And we can start using that as a life goal to work towards that. So some of the costs we would need would be legal fees, which on average might be about 1,500. Survey fees, not necessarily, because I mean, what you might need in terms of valuation might be mortgage valuation fees. Some would charge a fee, some would not. So let's say about 300, 700 for that. Stamp duty is usually the big cost, but now up to March, we know that is being given to a lot of people free, especially if you're buying your first property. Up to 500,000, you don't pay any stamp duty on. Before now, it used to be 300,000 for people buying their first property. So if you're buying second property, there will be a surcharge on that. That's a 3% charge. But I did a calculation recently to say I had a client that was buying a investment property for 500K, above 500K. And what we realized is if there was no stamp duty saving in place, it would have needed to pay 30,000 on stamp duty. But currently, she's only needing to pay just 15,000. That's 15,000 savings that the government has given to a lot of people. And this is causing a lot of traction in the market. A lot of people want to make use of this advantage before it goes away in March. So you see a lot of property investors coming back to the market to take advantage of that. So that might be something you want to bear in mind. But I know a lot of people are not buying property, their first property up to 500K, but just if there's somebody out there that's thinking about using that for their second home, it's about the right time to save money now. So there'll be other costs like your moving costs, all of those things. What I'm trying to say is bear in mind that there are other costs. Apart from you looking for deposits, apart from the property being affordable, there's a mortgage advice fee for $495 usually. But what I've done on this platform is I've created something called the key worker mortgages. And for people that are key workers and for you on this platform, what you can leverage until we close it down is that you don't have to pay the usual $495 fee that I would have needed to charge for giving you a mortgage advice. So this is just giving us an overview of the cost, because it's one thing having your deposit in place and you realize that, oh, when they say you should come and complete, you realize you cannot complete because you don't have the funds available. So it's quite important to be aware of these things early on. So that's basically what that is in terms of buying property. And I said I've been doing a few videos on mortgage readiness. How do you get to mortgage readiness? One thing I've not talked about and you must have picked out is, like you said, if you've just transitioned into the UK, it's difficult for you to get on the property ladder right now. So you might need to wait 2 years, but this could be different depending on the different scenarios you have. But one thing that really means is the lenders need you to build a credit history in the UK. So if you don't have any credit history, then you are not likely to get a mortgage. Some people come to the country to say, oh, I don't want to take a credit card, I don't want to take a loan and all of that. What that means is you are shooting yourself in the feet because you won't be able to get a mortgage because nobody has a credit history of you. And the only reason people want to give you money is they have a credit history on you. So they would check your credit history to know what is your credit history been in the UK. And your credit history will be based on, and please, let's take this seriously, your address. So are you on the electoral roll? If you are not on that, you want to do that ASAP. So that's one of the key things that people check. They want to check if you're on, that means you have a registered address in the UK. They want to check if you have credit card loans that you've been paying over time, credit card and loans that you've been paying over time. So that is saying that this person understands credit facility, they've made use of it, and they could manage it properly. That means that they have better confidence to give you a bigger loan, which is your mortgage. So if you have not been building your credit history, is the right time to start now. Taking a credit card for 250 or 500 could be your starting point. It starts making a big difference. And you start building that over time. If you don't like to use your credit card, I agree with you. What you need to do is buy on your credit card and on the same day, make sure you pay it out from your debit card. So what that means is you have the money you want to use, but don't use your debit card. Pay from your credit card and you can pay out immediately. You are building your record in the UK. And that would be the difference between the interest rate you get to somebody. So there is a credit scoring system in the UK. I would share some link which you can access. It gives you, if you have not checked your credit report or you don't know credit report, I'll say that's the first place to start. So Bukola, please remind me, I will share something for people to use free of charge for 30 days to go and check their credit profile. And this one gives you access to 4 different credit agencies. And if you start looking at what does the lenders have over you, if you don't have any credit history in the UK, you can't get a mortgage. It doesn't matter how much deposit you have, except we now treat you as an expatriate. I know people buy property from Nigeria or any other country, but it's a different criteria. You need about 40% deposit to make that happen for you. So to enjoy leverage as best as possible is getting yourself correctly on the credit history. So that would be something for a lot of people to take away from today and build on that. So that's your number one starting point. Your deposit, I've talked about that. So depending on where you want to, what scheme you want to use, 5%, 10%, 15%, whatever it is. But as a minimum, you need 5% if you're going on the Help to Buy. You can change the level if you're going on the shared ownership. So depending on how much percentage you want to buy. If you're going traditional, at the moment, I would advise 15%, but you can still get 10%. And you have other things to sort yourself out in terms of mortgage. It could be your guarantor, it could be support from family and friends. But let me, this might be shocking for a lot of people. A lot of people don't realize, and there are lenders in the UK that would allow you to use a loan from another bank as a deposit. Sometimes that's an eye opener for a lot of people. As far as, let me say this clearly, as far as your income would cater for the interest rate you need to pay on that. So for people that don't have a deposit, that might be an option for them. I'm not saying it's the right option for you. Like I said, this is not advice. So you need to speak to someone that is qualified to weigh out your options. So if you want to have 5 minutes, 10 minutes chat with me, I can then go through your options as a specific scenario. But these are things that are possible that people are not aware of. You can use a loan to get on the mortgage property, and that could be the biggest leverage you might want to assume. So getting the credit history is the fundamental thing. I said, like having a passport to travel, your credit history is your passport to finance. I say that again. Like a passport, it is to travel. Your credit history is your passport to your finance. So that would mean that would change your life in the UK, because everything works on the basis of credit in the UK or any advanced country. So that is where the leverage comes into play. So you want to make that to your advantage. I'm not saying go and get yourself over leverage. You're taking too much loan that you cannot afford to, or that is bad debt, or any of such things. What I'm saying is you need to get yourself registered on the credit history, build up your credit history, and that will change your finance situation. Some people would have excellence on their credit history. The interest rates they will get should be different from someone that has very poor or that have good. So you want to save yourself some money by just making sure your credit record is the best possible. So that's a roundup on property, on mortgages. The biggest thing is see the property you want to buy as your dream or something. You need a bridge to get there, which is your mortgage. For you to get a mortgage, you need a deposit to be in place. I've talked about the different options for getting a mortgage. Your mortgage needs to be affordable in the short term and in the long term, and this would consider how much income you're making now, multiply that by an average of 4.5, which gives you just a guideline. But like I said, be aware of any loans or any credit card you might have in the background, because that would be used in the calculation as well. And you want to get yourself credit worthy in terms of building your credit profile, and you are on the right track to get a mortgage. And I'll say it differently, you are on the right track to get your property, either your first property or your investment property. So those are the three main things you want to think about: your deposit, your affordability, and your credit history. If all of those are sorted, then you are in a good position to do that. I know a lot of people would ask, what about my visa situation? I've touched on that previously, and to come to that again, your visa situation will be different for different people. But on a general note, if you are on a visa, a restricted visa, one, you are not allowed to go on maybe some of the government scheme, which I mean the rent to buy, because you're not allowed to recourse to public fund, but you can be on a tier 2 visa and get help to buy. or any of those other schemes. So that is a way to think about it. You have the restriction if you are on tier 2 or tier 4, but it's not like you can get a mortgage. And a specific scenario will determine how to apply. Generally, they would expect you to be in the country for 2 years and maybe have 1 year or 6 months rolling on your visa, but it different for different lenders. So depending on your situation, there are some lenders that are focused on people with visa restriction. There are some lenders that are focused on people with adverse credit. There are some lenders that are focused on people with NHS type of income, where some people are working within a NHS trust, and at the same time they are doing private practice, or they are getting money from their limited company structure as well. All of these things needs to be put together for us to draw the right profile for a client and say this is your best option. So I would open the floor for questions, but before I go to the question, there's something I said I would share. And this will just take us 1 minute. I use this for my wealth clients. What this enables us to see, because a lot of people don't know exactly where they are. A lot of people don't know exactly what they need to prepare for in the future. I got a software that allows us to be able to map out different scenarios. It's called what if scenario. It's like cash flow modeling. We want to model like, okay, based on your income, if you're still maintaining that level of income, what would that mean for you over a long time? How much would you be your expenses? How much would you be able to save? How much would you have in your retirement age and stuff? A lot of people cannot plan that far, but this type of tool will help you to be able to know exactly. We're able to know that, okay, if you put your money in property or in shares and it's increasing by 2% or 3%, it helps you to know this is how much you would have in your retirement and stuff. So this is a powerful tool that helps you to plan where you are now and help you to change the scenarios to fit. Like, okay, maybe if I increase my income maybe by 1,000, what would that mean? If I say I want to take time off work and I reduce it by 2,000, what would that mean? If I put money in this property, in this pension, what would that mean over time? It helps you to have an holistic view of where you are right now and helps you to know that this is what you need to achieve going in the future. So it's a powerful tool. A lot of people don't use it, but if anybody is interested, I'm happy to share the link for them to register and I can build something similar for them. And the good thing is it will show you some graphics to help you to know if you can see your savings, your investment, your pension, your non-liquid, and it built everything for you. And it's based on a goal. So if you have a retirement goal, what's that? If you want a goal for your 70th birthday or 50th birthday, you can start putting that into this software and you can plan how you're getting towards that goal. And you can see how that is happening over time. And this is just something I feel, while a lot of wealthy people come to me to ask for this type of plan, a lot of people feel, I don't need this plan because I don't have enough money yet, or I don't have this yet. But if you can put a plan in place to see what your future will look like based on where you are now and try to do some scenario planning, that will really go a long way to help you. So I'm happy to use this for anybody that will be interested. And it helps you to plan your estate as well. I know some people are still very young, but the time to plan is now. So you can make use of all the options available. The wealthy people put the plan in place and make use of, they pay less tax than poor people. And when I mean poor, I'm not calling anybody poor, but people that are still building their wealth. And it's quite important to see what they are doing and feel like, okay, I should be using my tax efficiently. I should be doing this more efficiently. And I don't want to pay tax in the future, all of those things. So this is a powerful tool and I'm happy to use it for anybody that might be interested. If you want some clarity on where you are, clarity on where your future needs to be. Okay, so let me open up for questions, please. And I hope I get some questions to clarify some of the things. I've touched things on a high level, but I want to be able to have a deep dive with the questions. So please, if you have your questions ready, please.
Thank you so much, Mr. Dejinahan, for a very wonderful session. You haven't only talked to us about mortgage planning or getting yourself on the mortgage or property ladder. You've also touched base on, financial planning and all of that, which I believe one or two persons must have, found very helpful. So, right, moving forward, I really hope there are questions in the house. I was going to say that I picked a few things, that I could just mention. I'll go into the comment section in a minute. So you said you told me to remind you about the free 30 days app. I believe it's Check My File.
Yeah, Check My File, yeah.
Lovely. So Check My File is a very lovely one. They'll give you 30 days free trial. So you get your file checked, that's your credit file checked with TransUnion, Equifax, Experian, I believe. Am I right? Then one other one.
Yeah, Equifax, Experian. Yeah, I mean, you get the four major ones anyway.
And credit something.
Crediva or something.
Crediva,
yeah,
that's right.
That's right.
So those are the four, you'll be able to access your credit score from those four suppliers, so to say, just through one access, which is the Check My File. You can download it or check it out on your phone. So that's that, and thank you so much once again. So I was just going to mention, okay, I think I should go into the chat section first and let's see what people have to say before I talk. So Adiola says that's a good information. She must have dropped that when you were saying something. Thank you so much, Adiola. And from the previous Zoom session before it went off, I think it was a network thing, there was a question there as well, but I'll read Adiola's information or question here first. He says, for information towards planning is building your wealth through trips, popularly known as Ajo. I have one running and a new one to start in November. If you're happy to join, kindly holler. Terms and conditions apply. Thank you so much, Mr. Deji, for this wealth of knowledge. If you are not informed, you are deformed. That's very right, Adiola. She's just thanking you there. And I was just going to mention the Ajo part. So Ajo is just contribution. Some people call it a wusu or something. There are different terms for it. And I remember that when I got to the UK some years back, somebody told me that if you like yourself, the best thing you can do for yourself is get yourself into an Ajo, like a contribution group with trusted people. So that is something that has really been helpful, to be honest, and something Adiola has mentioned. So please, if you're interested in this Ajo that Adiola is talking about, you can private message her. Just click on everyone, then it changes, it gives you the list, and click on Adiola, and then give her a private message. And you both will take it from there. So Ruth has said, thank you. Adiola A has said, thank you so much for this. The information is priceless. Thank you so much, Adiola. And somebody private messaged me again to say thank you to Nigerian nurses in UK, and they really appreciate us for everything we try to do to help them. So we appreciate that you always attend as well. So moving forward, I have a question. Well, a question from the previous time. When you talked about shared ownership, you said it is not open to people on visa. So does that mean it's a public fund, or I understand the council house one, the council flat one, but the shared ownership, is it open to everybody, or is it just those on indefinite leave to remain?
No, okay, maybe I didn't say that correctly. Yeah, shared ownership should be, I believe the 2 years stuff, Mike, because you are getting loan as part of that. So the 2 years stay in the UK might affect anybody on the visa. Apart from that, it is accessible to them.
Okay, then I really hope you got that. If not, please, like we said, we put this together just so we can share knowledge, share information, learn from one another. So if you have any question or anything to add to what has been said, then please feel free to share with us. So my second question is, when you talked about you can use a loan from another bank as a deposit as long as your salary shows that you can, continue with the monthly repayments back to the lender. Does that mean that you then get a loan from a bank and be paying interest for that loan that you've gotten and use it as a deposit for another one that you'll be paying interest on as well? Do you reckon that is advisable? It's an option, one can make it a last resort, but I'm just wondering if it's an option that is advisable.
Yeah, okay, good question. I mean, like you said, none of this it's on a case-per-case basis. So one scenario this might be helpful for, it's someone that has good amount of income but don't have any deposit. They might want to take a loan for maybe 2 years and feel, okay, I want to take a loan for 2 years. I can afford to be repaying the loan because my affordability is okay. Rather than them saying, okay, I want to build my deposit for 2 years. Because for some people, it might not be possible. Some people might be committed to say, if I know I'm paying this amount on a loan, I know I'm going to pay it off anyway. So I might just as well do it. And the interest rate now is making people take that option. So it's not as advisable for most people, but for some, that's where they are. And it goes back to start or do from where you are. So the banks will check as far as you can be, the monthly payment on that interest is affordable based on your income level, then they are happy with that.
Okay. Then.
But that would not work for everybody. But that's a simple scenario that it could be useful to people in that scenario.
Right. Thank you very much for that. So we'll go on, but then just to mention, if you have anything you'd like to probably discuss personally with Mr. Adejulehan, like we said, is a UK mortgage advisor and financial planner. He will leave his number with us at the end of the session. You can speak to him directly. And because he's doing it as a key worker, is it scheme or something he calls it, he won't be charging you for the 495 pounds we normally charge people that come to him for financial advice or mortgage advice. So if you tap into this very rare opportunity, it will be very good. Also, moving on, I think I have somebody with their hand up. Am I right? Is anybody raising their hand up? No, I don't think so. Oh, no, yes. Juliana Stephen, do you want me to unmute you? Hello, Juliana.
Yeah, yes, please.
There you go.
Okay, I just have one question regarding the last thing you just talked about. Thank you very much for this opportunity. I'm really happy to be here. Thank you, sir, for the education.
Thank you for
coming. Just the last question. If you have, maybe you've collected a loan before now and maybe added up to your deposits, if they're calculating the mortgage, will it affect the kind of house you're going for or not?
Yeah, so when I talked about affordability, I said, I mean, your income level on average times 4.5. Well, you need to be aware of other loan or credits at the background. So the banks would do a calculation to say, what's it called? To know how much are you paying on those loan or credit card on a monthly basis. You know, for credit card, they apply 5% as a minimum. So they work it out on 5%. And if they add that to your regular expenses, and regular expenses in the UK, I mean, there's system in place for them to work out an average. So they might not take your own specific scenario. They work out an average because they know people will tell different story about how much they are spending or not. But statistics are available for them to know. For a family of two living in Manchester or living in London, this is how much they should be spending on average. So they use that average to calculate your affordability. So to your question, yes, they would include how much you are paying towards your loan or your credit card. If it's still affordable, then yes. If not, a lot of the softwares would show you if you need to pay down on your credit card or on your credit card or your loan.
Thank you very much. Thank you so much for the answer.
The other thing that could make a big difference is your credit history. So if you have a fantastic credit history, it will be seen differently compared to someone with not so good. So in a way, if anybody doesn't get anything from this, if you build your credit history to the best possible, you are giving yourself a head start. You're saving yourself a lot of money in the long run. And lenders will start to take you differently because they realize or they understand that this person is taking good care of their finances.
Okay, thank you very much for that. I don't know if anyone has any other questions, but I'll go to the chat room. I've got a question from Adiola A. Says, Can you touch more on right to
Right to acquire.
right to acquire? That's
Yeah.
it.
Okay. So that is similar to the right to buy. What that means is there are some housing association or there are some council houses that you can get help to buy on. Some of that is maybe if the housing association have refurbished the property in recent time, they wouldn't want to give people the option to do right to buy. But you might be able to go through some other scheme that allows you to right to acquire. So it might be housing association that is not on the right to buy list of scheme, but they would apply your right to acquire. It's similar stuff. It's just the difference is in the ownership of the property, housing association, how they've owned it and stuff. So, but that's how that works. But it's similar stuff. It's just that the first thing to do is if you have a property within the council and stuff, if you apply and they say you can't have that for this reason or that reason, then you can then ask, would we be able to apply the right to acquire scenario on that?
Okay. Thank you very much. Adiola A, does that answer your question? Please drop yes in the chat room or tell us if no, so that you can further expatiate. So I've got a question in there for Ruth, but before then, I want to say this before I forget. You said something about rent to buy. You said it's not available to everyone, if I'm right. Was that what you said? You said it's not available to everyone. You said the help to buy is available to everyone, like we know. Then when you touched the rent to buy one, was it rent to buy? You said, yeah, I believe.
The right to buy. The right to buy.
Was it right to buy? Oh, right.
Yeah.
Okay, thank you very much for that clarification. So jumping back on Ruth Dada's question, it says, please, what type of credit card is the best to build credit history? My bank has not been giving me credit card yet. Wondering if I can get somewhere else. Oh, yes, you can. Okay, I'll let Mr. Abeji.
Okay, the best way to look at that really, is when you join the credit check file, a lot of them will start giving you the options that are available to you. So they're kind of done a background assessment to know what credit card or what loan might be applicable to you, rather than you trying to apply for different ones, because that will start affecting your credit score. Talking about that, there's two types of searches. There's a soft search and there is a hard search. When you do a soft search, like someone is just making an inquiry on your name, it does not have any footprints on your credit file. But when you do an hard search, like someone is actually applying for a mortgage or applying for a loan, then it leaves a hard footprint on your stuff. If you do that too often, your credit score is going to go down significantly. So one good advice on credit history is, if you are about to take a mortgage or something, or you want to take a credit card or a credit or a loan, don't do too many applications at the same time. The way you can avoid that is to use comparison sites that allows you to see what is relevant to you. But I believe Experian or Equifax would allow you, if you register for them on their, I'm not sure if Check My File does have that, but I know Equifax or stuff, they will allow you to apply based on what is the most relevant to you, based on them assessing your credit history. So that means they've taken a gauge to know which lender is going to give you what. So rather than asking the question, who is the best lender out there, this thing changes. There's over hundreds of lenders credit card that you don't even know the name. So your best bet will be use a tool that does a comparison for you, match it to your own credit history, and gives you the best option.
Right. I really hope that answers your question, Ruth. Just to add on top of what he has said, normally that I know of, if when you Google on your phone, credit credit building credit cards or something around that. There are
Yeah.
different kinds of credit cards, but the one that says credit building is the one you want at this moment. So they are the ones like Aqua, Marble, Vanquish. They would give you quicker, or like the big ones like the Barclay cards, HSBC cards, and all of that. They are a bit funny, but with Aqua, Marble, Vanquish, and the like, they'll give you. But the only con about their own credit card is that the interest rates are often high or higher than the ones that ends the credit building credit cards. So you can just explore, read more around credit building credit cards if I'm right about that name. So
I challenge you, Bukola. Yes, while people think that's an option, that's the best option. Those facilities, they are marketing for that purpose because they know that when people see credit building stuff, you'll be surprised that the likes of Santander, Barclays have credit building stuff as well. They start with a basic. It could be giving you 250, and you'll be in a better position in terms of interest rates, just in case you actually use it for interest rates. But a lot of people get into trouble by getting those high interest rates, thinking, yes, I only want to build my credit, but it goes out of hand, it goes out of control, and they find themselves into bigger trouble. So a search might give you an idea, but leverage, and this is the right word, leverage the tools that are available that helps you to check what is relevant to you based on they are not just checking what is the best, they are checking what is relevant to you based on your credit history, because they have access to your credit history. That would mean that you have a 95% chance if you apply to the ones they are recommending for you. And it could be simple things like increasing your overdraft. Go to your bank and say, can you increase my overdraft by 50 pounds or 100 pounds? It's not major, but it's registering something on your credit profile. So it doesn't have to be a credit card. It doesn't have to be any other loan or something. It could just be your overdraft.
I am thinking she would prefer a credit card just so she can do something like what you mentioned. You know, when you said, even when you have the money to buy something, just buy it off your credit card. That
makes sense. Yeah. I mean, if people are not doing that option, I would recommend people highly do that. I know it. If you feel you won't be in control, then don't go that option. But if you think you can be in control, you've got this money in your savings account, use your credit card, pay it that same day, or set your direct debit to pay off the full amount. That would build your credit profile big time. But if you think you won't be in control, and going back to mindset, if you think you can undo it, then don't tempt yourself at all. Thinking, oh, I'm going to pay this 1 month time, 2 months time, then 2 months start to be 2 years.
Okay. Are you happy with that answer, Ruth? If not, please let us know. Say yes or say no, just so we can know to move on. Also, I'm aware that from banks like HSBC and Co, when you open a normal bank account with them, they would normally follow it up with a credit card, but it's not every time. I will just let it stop there because of our time. So just let us know what you say, Bruce. So moving forward, I've got Adiola A here. So she has said yes, exactly with your response. And she says thank you. And I've got, where am I? I've got Ayodeji has dropped his number. So if for those of you that want to contact Mr. Ayodeji Nehan for further financial planning advice, or for say you want to buy a property and you want more detailed information, very specific to your condition or your circumstance, then please message him on the number in the chat room. And he has said that he won't charge you because you've come through this platform, and it's right there for you to write down and save on your phone. A message from Adiola here says, I know Barclays is a good one, with £1,200 back in 2013. As you build your credit using your card, it automatically increases. That's right. So lovely, Adiola. So next one is from Galaxy S9. Where am I again? So it says, would you advise a particular bank for first buyer? Number one. I've got another question, but I'll let you take that one first. Would you advise a particular bank for first time buyer?
I mean, every bank, their job is to get customers to buy their products. There might be advertising gimmicks on, we'll give you this, we'll give you that or something. You wouldn't, I mean, there's a lot of criteria to check. Would I advise anyone? No. there is no one lender that is the best. Every lender have what they focus on. HSBC, for example, would focus on employed. If you're self-employed, you won't go to HSBC. So different criteria apply to different things. If you are a contractor, maybe you look at the likes of Halifax or Nationwide or something. But there are more than 100, 200 other lenders that people are not aware of on the high street. So this comes back to the question, should I use a mortgage advisor or should I go to a bank? While your bank might give you some appointment in 6 weeks' time or whatever, the biggest advantage of using a broker is they could check all of the markets to say, based on your scenario, Bank A will give you this, and this is the cheapest option for you over time. So one, I wouldn't recommend you going to your bank directly. You can go to your bank directly, get an option, but do not finalize without checking what options are there. And the mortgage advisor, a mortgage broker, would do this for you easily. Check everything within this mortgage market in the UK and recommend as relevant to you. So your scenario, okay. Looking about that, I mean, there are some schemes that some banks focus on, maybe groups of maybe, let's say, key workers or nurses or stuff like that, that they might go up to 5%. Then we might say, yes, that lender might be the right one. But I can't remember the names of some of those that focus on nurses that allow them to take maybe up to 5%. Like I said, use 4.5%, but there are options that might give you 5%.
Lovely. Thank you very much, Mr. Ayodeji Mehan. So I've got another question here that says, from Ruth Nadan, she says, I saw options of credit cards like purchases, balance transfer, etc. Was wondering which to go for. Thanks for the detailed explanation. We're so glad that it was helpful. Thank you very much for asking as well. So next question, I'll see if I've still got any. So I've got a question from Galaxy S9, which says, do I need a report, LOL, of what a lender can lend before I start looking at the market?
Okay, so LOL, what's LOL? I'm not sure what that means, but I believe you still. Sorry, no, I thought that was LOI. Okay, I thought that was LOI. Sorry then.
Oh, so, nice. Okay. Oh,
I start looking. Letter of intent. Okay, thank you. Yeah.
Sorry.
Yeah. So, letter of intent, I'm not clear what you're trying to say, but there's maybe you're trying to refer to a decision in principle. So in terms of helping us to understand the mortgage process, yeah, you would speak to a bank or a lender, say, this is the deposit I'm looking to do, this is my income, for them to check affordability, this is my credit history, for them to have a gauge of if it's possible to get a mortgage or not. Like I said, some people is just planning stage. I'll tell them, go and work with this, come back in 6 months, come back in 1 year for some people. But yes, so if you want to take it forward, the lenders, before they can give you a mortgage, they will do a decision in principle. What that means is they will do a soft search. I've talked about soft search and add footprints. Soft search will not leave any footprint on your stuff. It would leave a footprint, but it would just be an inquiry. So that's not a problem in itself. And they would do that for you to say, based on what you've told us, without us looking deeper into your situation, we are likely to give you this amount of loan. So that is a decision in principle. We are going to agree to this in principle. Say, okay, you can start looking for a property worth this value based on what you've given us. So that's the first step. Then after that, when you find a property and you confirm this is how much I'm going for exactly, if it matches up, then take it to an application. Application stage is where they will take all of your details, your income, your expenses, all of those things. In the initial stage, they've only taken basic information. They take how many dependents you have, all of those things, much more detailed. So it's like open up the bonnet. Initially, they've just looked at you to say, oh, we like the packaging, this is fine. the next stage of application, they would open up the bonnet to say, okay, where's all this connected? Where are you getting this income from? Where's that going? Where's all this? How much are you getting? How much are you saving? All of those things. Then that's where the full application happens. Based on that, they can then agree to give you an offer. But the question I think you might be asking is, should I get a decision in principle first or go and find a property? I say most decision in principle might last 1 month or 3 months. So that means you might need to do that again. So it might be good to just check your affordability with the mortgage broker and say, okay, yeah, this should be fine. You are good. Your income is good. Your level is good, without the need to check that. But I know there are some estate agents that would need you to do a decision in principle for them to be able to even allow you to view the property, because they want to avoid tire kickers and people that would waste time. So if that's your scenario, yes, you need a decision in principle. But I tell people to first explore the property they want to buy and see, okay, how much can I actually buy for this amount, what area, and that gives them a threshold of what they should be looking at. Either you do one or the other, it's just a personal preference. And maybe the estate agent might require you to give them a proof before they go ahead with any detailed talk with you.
Okay, thank you very much. I really hope that answered your question, Adiola. Sorry, Galaxy S9. If yes, please say yes, just so we can move on. If no, then tell us where you'd want him to shed more light on. So moving forward, I don't have any more questions in the comment section. I have in the room no Teflon Donkozo. I really hope you're fine with everything that has been said today, because I know you came with the expectation of knowing how to start and the kind of money to have. So please feel free to let us know if you are fine, if we've answered your questions as much as possible. Sharon, Anima Shao, are you happy? Everybody in the house, are you happy with everything that has been said? Also, Galaxy S9 is asking real quick, do mortgage advisors give decision in principle, or it can only come from the bank?
Okay, all right. I'll answer that question. I just remember there's something I didn't touch on. A lot of people might not be buying their first property. It might be a buy to let. So after that question, I will quickly touch on that. Just a brief for people to know what they need to be aware of if you are at that stage where you are thinking of a second property. And it doesn't necessarily need to be a second property, but I'll touch on that quickly. So decision in principle, let me explain the relationship between a bank and a mortgage broker. A mortgage broker and a bank. So banks would have mortgage brokers in branch, but because of the complexity of the regulation they need to comply with, a lot of them only have maybe telephone, or a lot of them have taken up the option of giving advice completely because of changes in 2012 for mortgage review and all of those things. So they have the options to use their own resources. So they would employ someone, they'll give the advice, they will give pension, they will give all of those things. But we have about 20 to 30,000 mortgage advisors in the UK only. And their work is to look at clients where they can meet them locally or face-to-face or over the phone, and then find the right lender for them. So we work indirectly with the banks. The banks don't pay us salary or stuff, but we get a commission from them using our service. So we are like a marketing strategy for them to say, okay, you do your marketing, you get your own business. Then when you place someone with us, we would pay you for that privilege. So yes, a mortgage advisor would get you a decision in principle based on the bank that they feel is the right one for you. So we have a sourcing tool. It's called a sourcing tool. And what that does is, like I said, I have access to all of the markets. Any mortgage that is available in the UK is on the sourcing tool. And I'll put a criteria to say, okay, I want 5% for someone that has a tier 2 visa, or I want 20%, I want that. All of those combinations will bring out lenders that are relevant. And then I can then shortlist to say, okay, we will go with these top 2 because maybe they will give us more in terms of how much they can lend us, or maybe they will cater for nurses differently and stuff. Then we can then apply for decision in principle with them. So it's from the bank, but you get it from either you go to the bank directly or you go to the mortgage broker directly. It doesn't matter. We have access to the same thing. Different types of platform, but the process will be the same thing. Decision in principle can be getting from the bank directly or from your mortgage broker, but that's the way the relationship works. So I hope people understand, because people ask me, who pays you this? What's your relationship with the bank? Am I better to go to the banks or stuff like that? So that's the difference. A bank would only be able to see their own products, because HSBC would have maybe 50 products or whatever. So that's all they can recommend for you, which might be the right one or not the right one. But a broker might be able to see 20 lenders that have 50 products. That means they have access to 1,000 products that they can check. It's not like we are checking this on a one-on-one basis. The sourcing tool will put a criteria in. I want somebody that wants to do help to buy, then it will source out to be what is relevant to that criteria. So again, technology is making it possible for us to do magic. So that is power of leverage.
Okay, thank you very, very much. That's very intelligent of technology. Well done. And Galaxy S9 says, thank you very much. You're welcome very much. And okay. I'm hoping that we finish very soon. So
okay, just a quick one. I said I was going to touch on the buy to let. So this is just 1 minute. So for people, we've talked about affordability and stuff. It's a little bit different when you're talking about investment property. 3 things that the lenders are looking for is you need an income of up to 25K yearly. Normally, there are other lenders that would take different figure or not take any figure at all. You need to have 25% deposits in your buy-to-let investment as a minimum. There are lenders that would look at things differently. And your rental income needs to achieve between 125% to 145% in terms of the rent. So let's say the mortgage you are paying is £100, just to make it simple. Your rent should be 1,250 as a minimum if you are a basic tax rate payer, or 1,450 if you are a higher rate taxpayer. And they will check this based on stress testing of 5%, that if the interest goes to 5%, would you still be able to pay that mortgage based on the rental income you're getting in? So I just thought it might be something useful for people that might be looking at their other property, second buy. And just remember again, as I've spoken to Bukola about this, there is a scheme, it's not in place yet. One was in place, but it's been cancelled. That will be relevant to nurses or generally key workers, where the government is given affordable housing, which is at a 30% discount to what it will normally go for. But when you leave that property or when you sell that property, you would only apply the same situation. You would only take 70% of that valuation. So this 30% will always remain in the property, just to help people that are key workers, doctors, nurses, firemen, and stuff like that, to help them to get on the property ladder. I know I didn't touch on that. It's not available right now, but that's something the government is looking to bring back, as I said, as soon as possible, but we don't know. But I just thought that might be useful for someone to be aware of that.
So we're just, I read about the key worker scheme. It's called, isn't it? Did you?
That's correct.
A while ago. So, but we then had a conversation about it. You can have a read. It may come handy for you, and if you don't mind, you can go through that route. So I think Galaxy X9 came ready. Bless her. If I was to give, and I was the most active person, shall I ask another question? Last question. If I collect money through Adjust Savings, how do I explain this to the bank during assessment? So, okay,
thank you very much. That is a very useful question. I was going to talk about Adjust and stuff. I know it's what we are used to, but I always tell people to be careful. You mentioned that trusted people. So the biggest question is, how do you guide against anybody doing the wrong thing with the money you are putting in a job for you to be able to use for your property. So that's one thing that you need to question. But yes, that's something people use. So how does the bank see this ajo as a stuff? The biggest, so there's something we call anti-money laundering. So your source of income and your source of wealth, the banks want to know that. So behind all of these things, the banks would ask for proof of, okay, where's your income coming from, all of those things as part of your application. So people need to be aware of that. And that's where people get things wrong sometimes. So like I said, some people might not be ready now, but they might need to plan for this. So the planning might be for them to get this documentation ready to say, okay, this is my pay slip, I've got this is my P60, this is everything is tying up to what you have declared, and nothing is seen to be suspicious. In terms of our job, one thing that lenders are worried about is they don't know the true source of that money. And that is the source of your deposit or your source of your wealth. So I always tell people to be careful about that. Lenders treat it differently. They are coming to understand that the African concept of ajo, ususu, and all of those things all put together. I would advise that if you can plan ahead, it will be much more favorable that the ajo sequence have closed. That means you have gone through the 12-month cycle, and this is what you have from that ajo, and it is in your account for some time. Could be 3 months, could be 6 months. But at the same time, if this is just a fresh money that you're getting from the ajo, and you are still going to be paying your own part of the ajo, because the way ajo works is, imagine you're the first person to take the whole collection, but you'll still be paying that. The banks don't see the fact that you are still paying that amount of money. So that should be deducted from your affordability, naturally. But they see the fact that you have a lump sum that you want to use as your deposit. So then when they ask questions, in the past, what I know I've worked is people would give a letter to say, yes, this is what we have done. This is the amount that is paid out to this person just from the account it's coming from. Because the way you pay the ajo is another structure. Is the individual person paying into that account, or individual person is paying into one account and one account is transferring it to the person that is collecting the ajo? So different things would create red flag depending on the lender.
Okay. I like the way you say depending on the lender, because I, for one, when we were going to do ours and we used the ajo method, I didn't have that hassle of having to explain to the lender or our lender. However, a colleague that did the same, wrote letters upon letters upon letters and got, I believe, if I'm right, all of the people that sent money to our account for that for that month to write a letter saying that they do not own a share of the house that they plan to
buy,
use the money to buy, if you get what I mean. So, and it elongated that process so much that they got confused and frustrated at some point. So I like the way you ended it on the note of it depends on the bank. While I just did it and that was it, nothing happened. I wasn't asked any questions. So you never know. So I'll just ask real quick, anybody here on the Facebook group, do you have any questions before?
There's a question.
I know. Yeah, I can see it's from Galaxy S9. I just want to make sure that I'm being fair. I'm going around everybody.
Oh, okay, that's fair enough, yeah.
Galaxy S9. I try to play the fair system. Right. If there is nobody, I'm just looking at the group, the Facebook group now to see that there are no questions there. Then I'll pick your question, Galaxy S9. I haven't overlooked it. So I can't seem to find any question. One person asked for your number on the group, and I've given it to her. And I believe that's pretty much everything on the group. So moving forward, I'll just pick the question up there from Galaxy S9 says, please can you also explain more about Bank of Mom and Dad? Must the mom and dad be a resident in the UK? So if you can, because I'm now being wary of the time, if you can try to paraphrase it, Galaxy S9, I wish I knew your name. I'm not happy addressing you as Galaxy S9. So if after you have paraphrased, if you need more information, please say his number is still in the group chat and then private message him or call him if you don't mind. So, and I've got another thing here from Adiola Okelola. She says, good information, Bukola. I was just going to talk about it. Thank you very much, Adiola. So I'll let you say
Yeah,
something.
so what you pointed out, I think that's a baseline in terms of anything you're looking to do. So it depends on the lender. So each lender would apply different criteria to the same situation. So that is why that is why the option of going directly to a lender, bank, or to someone that would assess the situation and place you in the right place would make a big difference in terms of what you get. And some people would go and say, okay, the banks could get me 20K. Some would say the same banks would get me 50K. And it's you kind of be very surprised. So to your question, Bank of Mom and Dad, yes. Is the same proof that comes into play. So everything we want to do in the UK, you need a proof for that. Either you're proving your source of income, your source of identity. So you have a right to stay in the country, which is why we talked about the Tier 2 visa or not. So everything you do, you need a proof to back that up. So if you're getting income from abroad, yes, it is allowed for you to use that. You just need to have a proof where that money is coming from. So Bank of Mom and Dad could be from abroad. They might need to back it up to say, yes, we can actually have this money. We have enough to show that we can give our child this money, or maybe we liquidated our shares or our property or something. That would further enhance the proof. Because one thing they are afraid of is money coming from Africa, which could be money laundering. As far as you can scale that, which is not difficult to scale, like anything you do here in the UK, have something to say, this is why you've done it, and this is the backup for it, then you will be fine. I hope that helps, Galaxy. Galaxy, we wish we know your name. So if you're not too far off, you can just tell us your name.
Okay, while we wait for her to tell us her name.
It could be
Thank
Ido.
you so much. Oh, sorry, he or she. Thank you so much, Mr. Ayodeji Nehan. Thank you for your time. Everybody that has attended till the end, thank you so much as well for staying with us. And to all of our Facebook viewers as well, thank you as well. I really hope that we don't have any more questions, just so we can begin to plan to round off. So just as a summary, if you have like a final note, just to wrap everything up, like something I was expecting, most of us are still on Tier 2 visa, because if you're still on Tier 2 visa, it means you're still within your 5-year period. By the time you're up to 5 years, you're crossing to ILR. So some of the restrictions will apply to somebody on ILR. So for that reason, I believe most people are still on their Tier 2 visa and they want information that are really specific to Tier 2. And if you can just give us like a final note to summarize like a step. Okay, you come in, do this, do that, then contact me for more.
Thank you. Yeah. So I think the biggest thing we need to focus on if you're looking at a mortgage or property in the UK is your credit profile. So irrespective of if you are Tier 2 or stuff or anything, get yourself as quick as possible on that. Basic account opening, basic overdraft would get you started in the right place. Start leveraging on loans, credit, but make sure you're paying everything you can so that you don't get into further trouble and say, oh, you lent on this platform for you to get loan and stuff. So that's not what I'm saying. I'm saying that you need to build your credit profile as soon as possible. So with the Tier 2 visa, to simplify it, I would say most lenders at this time would need you to be in the UK for 2 years. Like anything is lender specific. This could change as of tomorrow. But at this current time, they'll need you to be in the UK for 2 years and maybe have 1 year more rolling on your Tier 2. So some will take a scenario of maybe you have 2 years running. Some will take, maybe you'll be in the UK for 3 years. So it really varies, but the baseline I would just say is when you are on for 2 years, then that might be a starting point. It does not mean that your partner that is on a different visa or status could not be the main person on the application. So if you've gathered anything at all from today, two income would definitely be much more helpful to get your affordability in the right place, because most times the income times 4.5 does not give you much in terms of how much you want to borrow. So that would be the baseline. Start getting yourself on the property stuff. Documentation is an important thing. That's where I feel a lot of people get mixed up. They don't have the documentation to back up what they are saying. So it's important that whatever you are planning to use, you have the documentation to back it up. So that's one very important thing. Your P60 and all of those things are matching up. So because lenders are looking very strictly on fraudulent cases. And one thing, a point of warning is if there's any fraudulent situation, they might report you to ciphers, which you want to avoid by all means. So I would say, while some people might advise you to rush on things, I would say it might be beneficial for you to slow down, get the right process in place. The reason I say this is I know someone that has done things illegally and she's been put on ciphers, and that would last at least 6 years. And that's a criminal record. And you don't want that on your name. So while I say leverage, get on the property as quick as you can, I'm not saying force yourself and get yourself into trouble. So that is a big warning for anybody.
Okay, thank you.
So that's basically it. I mean, if you could understand your deposit level, which could be different things for different scenarios we've talked about. We've talked about when to buy, right to buy that you don't necessarily need a deposit to for. So the deposit is one big question. Where do you get that from? How do you prove that? The other big question is affordability. As I've given a guideline, use 4.5 times your income or joint income. That gives you an idea. Your credit card and your loan would affect your affordability. So you want to check all of those things. But simple things I remembered again is there are online tools. If you don't want to come to me directly to ask a question, there are online tools you could just use to check your mortgage affordability or mortgage calculator or mortgage affordability calculator or something like that. That could be a starting point for you to start understanding what the lenders are saying, what they would do differently. It might not be the exact thing you go away with, but at least it will be a starting point. So get your deposit in order. Either you have it, either you're leveraging on others, either you are leveraging on government scheme, whichever way it is, make sure it is proven. And if it's a job, make sure, like we said, different lenders will look at it differently. So make sure you have the backup of others. If they need to go to that extent to ask for letters from others, make sure you can get that sorted. Affordability is the biggest thing. And so deposit, affordability, and your credit history would be the three major things you want to focus on. If you can focus on that, to find a property is quite easy. You can go on Rightmove or Zoopla, you can find a property. I've told Bookie the last time we had a chat, there might be some things you need to know to be able to search things properly to get the best leverage as best as possible. But I mean, to keep it simple, just keep those three things in your biggest pocket of what you want to plan for. Set it as a goal, and you'll be able to be driving towards that goal. And always remember that whatever it is, mortgage or property is just one strand of your life goals. And you want to make sure that every other strand are matching up, or you have a plan towards that. And a plan could get you to where you want faster than you not having a plan. Because people will say, I'm going to get a property next year, but next year will turn to 5 years' time, and they are still on it. So that would be my biggest takeaway. The money we pay or you pay on rent is not money you can get back. So, and you want money to be working for you.
Lovely. Thank you very, very much. I've learned more than I know today, and I really appreciate that. we've had this time, this moment. So in the absence of questions, I would suppose we would just, end this meeting today. Adiola A says in the chat room, thank you so much for this host and coordinator. This has been awesome. Juliana Stephen says, thank you so much for this information. And we really do appreciate you. All of us at NNUK appreciate you. So I will look at the Facebook group real quick, just so I don't cut any question on anybody.
Just a quick one when you are looking at the Facebook stuff. I just wanted to, I just remember to say, I've spoken to Bukola previously, and our knowledge in the market in terms of property might be your first level of leverage. She knows enough to be able to give you some guidance. I know she's been doing some YouTube videos as well, so you might want to pick those up and pick her brain as best as you can. And that could be your starting point. If that's, you then need any further help in terms of checking what the lenders will say, I can then come in and help you along the way. But Bukola has a lot of knowledge around the mortgage stuff. And I've been asking her if she wants to come over to start doing property and finance, but she's not said yes yet. So use our knowledge as best as you can, and then if you have any further questions, I'm happy to. Like I promised, if Diola share your details with me, I would the holistic plan I showed with the graphs and stuff. I'm happy to create one for each person, just for us to see where you are now and plan towards the future. So I can pick that up with Bukola later.
All right. Thank you very much. Adiola wants to pick my brain. You're not allowed. Thank you so much. Thanks for that lovely, kind words. Well, we're just nurses supporting ourselves. And even if you're not a nurse here, just know that nurses care and we are nurses with insight. So I'd love to end this meeting at this point. If you have further questions, we have Mr. Ayodeji Nehan's phone number in the chat room. I've also dropped it in the Facebook group as well. Please pick it up and take it from there. Okoyemi Goddess just said in the Facebook group that thanks a lot for this information. I enjoyed watching. It was worth my time. It feels so good, maybe because I'm a YouTuber, when you have a session or you spend like time doing videos and editing the video and releasing it, and you get lovely feedback. Like, it's so warming. So people are appreciating you left, right, and center. Well done, Mr. Ayodeji. Well done,
thank you, guys.
And would like to round this up now. Thank you so much for waiting till the end. Now, Steflon, you refuse to answer us. Are you sure you're fine? Did we pick your question eventually? Did we meet your expectation eventually?
Mr. Ayodeji, thank you for
Hello, sir.
Wonderful presentation which you did. I think I gained a bit. It was really helpful. Thank you so much.
Oh, thank you, sir.
Okay, thank you.
And last word for me, your decisions decide your destiny. So whatever we picked from here or whatever we pick on our journey of life, let's make decision on it, or else life would happen, as you know, and we will be talking about this again in 2 years' time, and you feel like, oh, you've not done anything. So I'm like to encourage and empower and push people to say, like, you know what, this is not a bad thing. This is, for most people, the starting point for building wealth for themselves and for the future. So don't let that go past you by life happening. So make a decision to start doing something now. So marginal gain over time will lead you to where you want to be. So well done, guys. And I'm open to hear about your good news about your properties and any conversation you would like to have. So well done, guys. And thank you for keeping us all LD as NHS staff. We really, really appreciate that.
You're welcome. You're welcome. I'll just, if you unmute yourself, everybody, and just say something before we end. Unmute yourself and just say something, anything you like. Let's hear what your voice looks like, if you don't mind, please. Just say something. Let's be interactive. Just say something as we end. Unmute yourself. Adiola, I can see you. Hi. Sharon, are you still there? Unmute yourself. Joe Agbo, Tony Bob, Ruth, Adiola, and Juliana say something. I think they've probably left their phone somewhere. So Adiola says in the comment section, thanks and kisses to Gabriel baby for enjoying our voice and thank you so much. She also says that thank you to you, Mr. Nehan. Thanks for all of our participants. Trust me, this information is priceless. I agree with you, Adiola. Adiola is also one of the co-founders of the Nigerian Nurses in UK. I know you haven't met her yet. Arita is not here. She's another co-founder. So I'd love to end the session now if everybody's fine with that. Until we come or meet again, take care, everybody. Have a very, very wonderful evening.
Actually, Bukola, I wanted to say a big thank you to that joy you are holding in your hands. It's just been very peaceful through the session. So
thank you. Thank you. All right. Bye.
Thank you very much, everyone.
Bye.
Bye, guys.